JPMorgan has filed to launch a new tokenized money market fund, joining Morgan Stanley and BlackRock on similar announcements over the past few weeks. Meanwhile, Kevin Warsh likely to be confirmed for the worst job in the world, and I will tell you why it is the worst job in the world that I would never want. We've got a lot of other news to dive into right now on the Daily Wolf. Let's go. What is up, everybody? Welcome to the Daily Wolf on Yahoo Finance. I'm your host, Scott Melker, also known as the Wolf of All Streets. You can find me right down there at Scott Melker on your favorite social platform, Friendster, MySpace, all of them. Now, we're going to spend the next 15 minutes talking about every Bitcoiner's favorite topics. You know, institutional adoption, the government, JPMorgan. Sometimes I have to pinch myself wondering how I got so lucky to talk about these topics that I'm so passionate about. But to be honest, that's where the narrative is. So it's where the puck is going, and it's where we need to skate. And somebody who's skating there right along next to us is these guys. JPMorgan files to launch new tokenized fund as Wall Street tokenization race heats up. Nothing gives us a JPMorgasm in the crypto community like a tokenized fund launch. All right, but what's happening here? This is a tokenized money market fund that they're advertising that will likely be for stablecoin issuers, much like the ones that we saw from BlackRock and Morgan Stanley. Now, of course, BlackRock announced 2 more tokenization funds just on May 8th, and JPMorgan now the largest U.S. bank by assets joining the race here. But as I told you with the Morgan Stanley and the BlackRock products, why does this matter? Well, we know that stablecoins are eating the world, and that every entity on the planet is rushing to issue their own stablecoin. But it's not that easy. If you want to issue a stablecoin, you need to know how to issue the tokens, you need to know how to redeem the tokens, but more importantly, you need to know that these assets are actually one-for-one backed and that you're managing a treasury. Now, running a stablecoin in a high interest rate environment is an insanely profitable business. Tether made tens of billions of dollars last year simply by taking in money and then buying treasuries with it and holding those treasuries until redemption. Well, doing that, as I said, is not that easy. And what these products offer is anyone issuing a stablecoin the opportunity to just buy this tokenized money market fund, and you can choose now your bank or institution to do it from, and they will actively manage that treasury for you. It takes a lot of the complexity away. Now, I remember reporting on the size of the tokenized market and real-world asset tokenization market a year ago, and it was a couple billion here, a couple billion there, casual couple B. Not a big deal, right? You had mostly crypto incumbents, and Franklin Templeton was kind of the institution at the lead, and they were tokenizing U.S. treasuries, the most vanilla, boring first iteration of tokenization. Actually, it's the second because stablecoins are the first. And then you had BlackRock enter the market with BUIDL, BIDL, which was a sign that they were cool crypto people because we hodl our coins. They went with BIDL. Well, that's now at multiple billions of dollars, and the tokenized RWA market in total now is at $30 billion. Still a drop in the bucket versus the global financial system, but growing at a tremendous rate, and it's going to go full hockey stick parabolic adoption very soon. JPMorgan has once again come in with a new product, and they are going to compete. Big story here. We'll see how it lands in the next few weeks. Another story we've got is a brutal, disgusting, horrid Q1 for publicly traded crypto companies. Now, eToro reiterates commitment to crypto despite folly activity in Q1. I had Yoni on the show live from Consensus last week. The fact that we have to have stories that are like reiterates their commitment to crypto as like a crypto company is not going to do crypto shows you just how bad sentiment is right now. But if we break this down, I've been reporting on the horrible earnings in Q1 from all the crypto companies on this show, right? We talked about Coinbase being down 31%, $394 million loss in Q1. Robinhood crypto revenue down 50%, but I told you that was replaced by prediction market revenues. They were actually up. And eToro yesterday, crypto revenue down 38% to $2.15 billion. Crypto trades were down 50%. And commodities are now 60% of commissions, which is a huge story in and of itself. But as I told you, this has nothing to do with these companies. When crypto is in a bear market, when Bitcoin prices are down, people aren't that interested in trading. Retail exits the building for a while. Volumes go down. And naturally, crypto exchanges that are dependent on retail volume are going to see poor earnings. I would venture to say that when Bitcoin is inevitably trading at $126,000 in the coming months, Yeah, I said it. That these volumes are going to double and triple, and we'll be talking about the incredible earnings of all of these companies. But right now, yes, we've had a brutal Q1 in the crypto space. But while that's happening, we have the first story with, institutional adoption ramping up massively, people building during the bear market, the infrastructure and plumbing that's going to be needed when inevitably we ramp right back up. So I think eToro will be just fine. We know Coinbase and Robinhood, they'll all be just fine. We just need to wait until the market comes back, and then these stocks will probably do incredibly well. Now, the next story, Kevin Warsh, man. As I said, I would not want to be in this guy's shoes for any amount of money. You couldn't give me his whole I married to Estee Lauder fortune to take the job of Federal Reserve Chairman, especially under one Donald Trump, who put on that whole soap opera with Jerome Powell at the Fed building with the cute little hard hats. You guys remember that? The most memeable event in the history of mankind that probably proved we were in a simulation. Well, we got a tale of two Warshes right now, right? We got this guy right here, Daddy Warsh bucks. He's worth billions of dollars. He's a hawk. He comes in, independent Fed. We're going to reduce the balance sheet. But we know that that's not the job that he signed up for, right? We know he's more likely this Kevin Warsh. Great hair. But the sock puppet that he was called in his hearing, who's being installed by Trump and his administration to do one thing and one thing only, and that is to cut rates. But I'll tell you why I would not want to be in his position, because he is completely stuck. Right now, prediction markets say there's a 30% chance that the Fed will have to hike rates because of the inflation numbers that have been coming in. And inflation is running hot. Let's just tell you what happened this week. We have CPI came in at a 3-year high on Tuesday. This morning, PPI came in running hot. And let's take a look at a couple charts just to support what I'm saying about inflation. I'm going to tell you that when I get numbers from the government on inflation, I don't believe them. I don't believe anything my government tells me, basically, at this point, which is sad, because I'm not a conspiracy theorist. I watch the UFO videos. Nothing interesting there, right? But first of all, we didn't even get data during the government shutdown, and we seem to be fine. Every time we get job data, they quietly revise it down by a few, million jobs at the end of the year while nobody's looking. And we all know that the way that they calculate CPI and PPI is effectively broken, and they can change it on a whim to make sure that the numbers look good. So yes, the Fed has a target of 2% inflation, and we vacillate anywhere from 2 to 4% right now, right? Is that what you feel like inflation is when you go to the store? Because here's cumulative price increases in the U.S. over the last 5 years. Pound of coffee, 105% increase. Pound of ground beef, 68%. Fuel and oil, okay, we can chalk that up to the war maybe, 63. Auto insurance, 58. Transportation, 43. Going on down, dozen eggs, 39%. Restaurants, 30%. Family health insurance, 27%. New car, 20%. Tell me how on God's green earth do you calculate inflation at 2.5 or 3 or 3.5% when these are the things that your average person has to pay for on a daily basis? It is absolutely insane to believe the inflation numbers that we're seeing when you feel the real inflation numbers on the ground. PPI came in today, 4.7% rise per year over the last 5 years. These are the inputs into production that our companies have to pay. We know that the price of goods and the inputs are rising. We don't need charts to tell us. And of course, the biggest problem that's causing all of it is our runaway debt. But maybe I'll show you this first, and I'm going to put the Benny Hill music today. That's the U.S. national debt. It's $39,237,672,000,672, and it's going up and rising. You would need an auctioneer or Benny Hill to do this as fast as it's going up. That's going to be 40 trillion very, very soon. 40 trillion in national debt. And so the debt service on that has now reached $1.271 trillion. I'm old enough to remember when $1 billion was a lot of money. Now our debt service dwarfs our military spending. It dwarfs every other line item on the menu. And this is the biggest problem facing America. Milton Friedman, once famously said that inflation is always a monetary phenomenon. It's only created by the government, and it's only created by money printing. And how, pray tell, do you think that we are going to grow our way out of a debt clock that's going up faster than my ADD can handle? You print money, and you print a lot of money. And what happens when you print money? Inflation rises. So if you're Kevin Warsh right now, and you're coming into the Fed, the independent Fed, totally independent, not at all influenced by the government or run by private bankers at all. But let's pretend the Fed's independent. What do? Do you hike rates to fight inflation? Do you lower rates because you're being bullied and you know that the government and the economy need to be stimulated? Or do you stay flat and end up the guy in the hard hat next to Donald Trump in the building getting bullied? Wouldn't want this guy's job in a million years, but he's coming in, and pal, Captain Transitory, is on his way out. Now, I got another story about stablecoins for you right here. France's central banker beau. It's like something you would say like in the 1930s. I'm on a date with my banker beau at the speakeasy. Clashes with Lagarde over private digital euro plans. So in case you were missing all of my previous shows, dollars are eating the world, and they're doing it through stablecoins and countries no likey, right? And you now have the French banker beau over here alongside the head of the central bank in Germany, the Bundesbank. That's what they're called. They're saying, you know what we need? We need a lot of stablecoins, and we need them backed by euros instead of dollars so that people stop transacting in dollars using dollar-backed stablecoins. We need euro-backed stablecoins. Well, strangely, as obvious as that seems, and every country does need these or the dollar is going to eat their lunch, the head of the European Central Bank, because Europe is so confusing, like why do you all have one big central bank, but also your like cute little central banks? So ridiculous. But Lagarde, the head of the European Central Bank, says that stablecoins are bad. And she doesn't want them, and they're a threat to the banking system, and all the nonsense that we've heard from the banking lobby surrounding the Clarity Act. But the banks don't want to lose their incumbency, and they're worried about deposit flight in the United States. That's why they're fighting it. She's fighting it for a much more insidious reason, and that's because she believes in a central bank digital currency. She wants, like Smeagol, one currency to rule them all. He wants it. He needs it. Like Gollum. You guys know that guy. The Ring. So weird. Yeah, she wants to have a central bank digital currency issued by the European Central Bank that will be the only money you use. Don't like how much your taxes are? They just take them out of your wallet. Need to give you a little stimulus? Drop it in your wallet. You want to pay one of your friends for that gentleman's club you went to the other day at Consensus? Because that was the big story in Bloomberg, apparently. Yeah, you can't send that without the government knowing that you did it. She wants complete and utter control of the money supply, and for her, stablecoins are a threat to that. This battle is not stopping. It is only going to get greater. And speaking of battles that are not stopping and are only going to get greater, my God. Senate crypto bill receives over 100 amendments before Clarity markup. So yesterday I broke down the whole Clarity Act for you, all the incredible things that are in there, and I told you that the senators had about 24 hours to bring up amendments before this was marked up tomorrow on Thursday. 100 amendments that they have to vote on individually in markup to get this out of committee. Now, I'm going to let you take one wild guess. I will give 5 Shiba Inu Dogelon Mars to the Moon tokens. It's worth a lot of money. To anyone who can tell me who filed the most of these amendments. It's Elizabeth Warren, and she filed 40 of them herself. 40 amendments that they all have to now sit through and sift through. One of them called people Jeffrey Epstein co-conspirators in the amendment. She's literally just this like another kind of filibuster. The good news is she has filed 338 bills in her career in the Senate. Illustrious career. Do you know how many have passed? Goose egg, 0, zilch, none. The least effective senator in the history of mankind. You heard it here first. She's useless, but she's going to make this a very hard fight. But meanwhile, Clarity Act may or may not pass, but the institutions are coming. Adoption is increasing. JPMorgan, BlackRock, Morgan Stanley, and the crypto industry are not stopping. We'll see if we get clarity, but we know we're getting mainstream adoption. That's all I got for you guys today. We'll see you tomorrow. Peace.